Welcome to an update for Federal Milk Marketing Order 33. This is Dr. Lawrence Jones with FARME Institute, and I would like to thank Nobis Agri Science for sponsoring this podcast. So let's get started with kind of the discussion that's going on in the market right now, which is a tug of war between what I would call fundamentals and rumors, because you've all heard about the disease in the panhandle of Texas and what impact is that going to have. Some of the analysts sent around emails saying that we're going to be limit up for 3 days, 4 days straight, and then some of us have just said, no, let's just kind of watch this. Underneath all of this is always the buy the rumor, sell the fact. The market will do whatever the market wants to do. And one of the reasons that this gets to be kind of out of control for a while is what I would call the lack of intelligence. We just don't have good information about what's going on most of the time in the dairy industry, and therefore the rumors can run pretty rampant. Now for me, this mysterious disease in the Texas Panhandle, again, lots of new dairies up here in the Panhandle, is very coincidental with all of the fires that have been going on up in there. And so when I'm get done looking at this, and again, there's lots of ABP stuff going around. There'll be a podcast on Friday looking at this, but I have a strong suspicion this is going to be tied into the smoke inhalation that these cows had, but we'll wait to see kind of how that plays out long term. All right, so if we look at the kind of the April class 3 contracts, here is about when that rumor started. It was buy the rumor, sell a little bit of the fact. Now let's buy the rumor up a little bit, and then now let's kind of sell it back off a little bit. So again, I'm not trying to minimize what's going on in the Panhandle, but I think we need to kind of keep everything in the big perspective. We're almost 2 weeks into it now, and if it was highly, highly contagious, we'd have it on all of our farms. So I suspect it's going to be fairly well contained. We've got to remember that what actually controls the April price is the National Dairy Sales Report. So again, there can be all sorts of rumors, but it's what the consumer is actually paying for cheese, whey, butter, non-fat dry milk that drives these prices. We'll go back to looking at your fiscal uniform price that just came out. It was $17.96. It was up about 6 cents from last month, and if we plot these out relative to where we've been, at the highs that we were at in 2019. So again, overall, historically, would not be considered a bad price, but when you put it into context of where we were for a while, it's almost $8 below this peak up here, which I continue to say was an unsustainable kind of a scenario. Your $17.96, was kind of right in the middle. It was $18.15 across the nation. Always the highest are down here in the southeast. Lowest was always Minnesota, Wisconsin right now because they are such a heavy, heavy, heavy class 3 federal order. And yours came up about 6 cents, which actually better than the southeast, but one of the lower ones of what I would call out of the southeast. That's partly due to deep pooling, partly some different things going on. Northeast was up 38 cents. Minnesota, Wisconsin was up 81 cents, even though they had the lowest because of that high class 3. If we look at class 3 versus class 4 for the next year, they're going to continue to be significant deep pooling. Class 4 is just over top of class 3 by just a significant, $2, $3, almost $4 at times. And you're depooling a huge amount of class 4. Basically, there's no class 4 in your order right now. We're clear down here. You have a capacity, clear up here. So we're removing about 11 million pounds a day of class 4 from the pool. That's not necessarily a bad thing. It just says if you're a co-op that has a lot of class 4, you're going to get a depooling check. If you're in a co-op that's all class 3, well, your neighbors will get the check, but you won't. Fat prices in the federal orders were down just a little bit. It was like 4.32 last month, but very strong. I always kind of look at the Northwest at almost 4.5% fat, which is crazy. And if we look at your numbers, you were 4.23. And that's up from that 4.13 a year ago. So fat is just continuing to be very strong. Your protein was more or less flat, 328 versus 327 last month. And if we look at the prices for fat and protein, so the top one is the fat price projected off of the futures contracts. The bottom one is protein. Protein, we were hoping to keep that above $3, but we're going to have a tough time breaking $2. So nobody's going to be feeding significantly for protein. You're going to be feeding significantly for fat. I like to look at the carry in the market. Right now, the highest carry is in September, October. The class 3 prices out here are just a little under $19. These were accurate as of yesterday. If we're going to get up there, we're going to have cheese rally up to $1.86. And we're going to talk about protecting milk prices here in a minute. I found myself selling some 1950 calls for 60 cents yesterday, which would give us, clear into $20 protection. Class 4 looks like it's going to have its peak in about October, November, somewhere in this time frame. And this is going to be the last time that I actually show you this kind of information, because I haven't convinced you by now that there's possibilities in the market. Then I don't think anybody will ever convince you, because we said we'd sold them April $18 calls for 50 cents. Here we are at $16.32, a very good sell. In May, we said $18.50, and then I said I actually got hoggish and sold some at $18. Here we are at $16.68. So about $1.05 per hundredweight added it with those contracts. And the reason that this has been working so well as we look at the carry in the market, and this is nothing more than today's price compared to what it was 6 months ago, and February was right at $2. So we've been in this negative $2 range, basically clear back to September of last year. And this is February right now. They're coded as 1 through 20, but it's just looking at it back. I want to look at the slaughter data. I'm looking at this a little bit differently now. This is 59,826 for the last week, and to me this is a very confusing set of data. If we look at it compared to a year ago, we're down about 7,000 animals a week for the same period. But what I've been doing is putting this in a rolling 12-month scenario. So for the last 12 months, we slaughtered 57,400. If we compare that back, it was 59,020 for the 12 months prior to 2023. So we're slaughtering less animals, but if we take that, multiply it by 52 weeks, we've got almost 83,000 fewer animals slaughtered in the last 12 months than the previous 12 months. And that would have suggested that we've been significantly expanding the herd with that low of call numbers. And I've been putting this into a rolling call rate. If we go back and compare some data, and I didn't actually do it for this, but we were in expansion mode here. Here we were contracting quite a bit. And my question is, why aren't we expanding when we're back down in here? And in fact, we're not significant. And one of the things that we've got to keep an eye on is this region 6, because this is it's got Texas, Oklahoma, New Mexico into it. And we'll start getting some more data this Thursday. But right now, there's not a significant increase in calling as of the first part of March. Now, again, this mysterious disease didn't really start until about the 13th. So we'll just keep an eye on this region 6 to see what's going on with slaughter data. And I wanted to hold this report up just a little bit because the milk production report was coming out, so I really wanted to get that for you. In February, we ended up with 9.3 million cows. That was up just a little bit from January, and actually USDA had lowered the numbers in January by just a little bit. But what I'm looking at is a year ago we were 9.4 million. Now we're down to 9.3, but we culled significantly fewer cows in that time period than we did in this time period. So the question is, does that kind of all make sense? And I just continue to shake my head and not sure I understand this. If we look at daily production, it came in right where we thought it would on the seasonal number. It means that it increased appropriately from January to February. And if we look at this back, yes, we're down from a year ago, but we're pretty similar to where we were 2 years ago. So production to me is actually fairly stagnant for the last 4 years in February. And milk per cow was exactly where we expect it to be. It came up from January the right amount. And again, these things can't go up forever. This is about a 9-year trend straight up. And as somebody told me the other day, trees don't grow to infinity. At some point, they have to level out. And I think we're starting to see a leveling out in this production scenario. And part of what's driving all of this is the fat percentages back in January, because we don't have the data yet. But just like what you guys have done, the fat test is just continuing to rise, and this is just a significant number up here. These are out of the egg prices that we'll get in 2 weeks here. Let's turn our attention a little bit to the global market, because that seems to have an impact. The last global dairy trade was actually down almost 3%. That took almost 50 cents out of our prices. Everything was down. So if we look at butter, we're 284 on the spot market, 283 on the global dairy trade. We're just not going to be exporting any butter. Cheddar, we should be exporting some, but we never seem to get over 7%. Takes about at least 10 cents to 20 cents to get non-fat dry milk offshore, so this $1.12 has probably got some downward pressure in it. We like to look at whole milk powder to get the world price at $14.27. You say, well, we don't actually sell into that market, so it doesn't matter. But in fact, it actually matters significantly. I've got a friend in Mexico right now that is saying that the plants in Mexico are buying whole milk powder from New Zealand at a cheap rate. They're not buying the fluid milk from the dairy, so all of a sudden we're swimming in fluid milk on these Mexican dairies. So that means we're going to have more cheese made in Mexico, and we're going to export less to Mexico. So it has a direct effect on your bottom line. If we look at the exports for January, cheese was up a little bit, but again, we're at 7.1% of our production. So we just have not been able to get over that number. That's one of the highest that we've seen. Butter, we're exporting 2.3. We're probably importing 3%. So not a big deal. And I like to look at one more graph here, which is what I call my rolling disappearance. How are we putting together production of cheese versus demand of cheese? So it was very flat back here in 2019, 2020, 21. We had this huge run up, and now we're just flat. We're just absolutely flat. And if we look at what we did in January, we made about 38.4 million pounds a day. Our demand was 38.5, so they're just right together with each other. So it's going to be interesting to see what the cold storage does this next week or so. But right now we got about 38 days of excess cheese in cold storage. Turn to grains real quick. It looks like this corn market has bottomed out here in the end of February. It is trying to trend up a little bit. Lots of news about the Brazilian crop as to whether it's going to undergo some weather stress or not, and also what the planting intentions and everything are for the U.S. crop. Bean meal has actually done about the same thing. It bottomed out about the same point. We're not back up into our channels that we'd built, but looks like we're headed back there. As we're getting ready to do crops, just real quick on root zone, looks like the thumb of Michigan is looking like it's got plenty of moisture. Michigan overall is not bad, but southern area and particularly your neighbors to the west are particularly dry. And we look at what the models are saying, for the next 3 months, the southeast is going to be really wet. That's because we got a subtropical jet that's really kind of shoving a bunch of moisture into here. Looks like you're going to have equal chances for precipitation, but be significantly above temperature. So that's going to be an early spring, and have to get the crops in the ground, at a fairly fast clip there. All right, I hope this was useful, and I hope everybody has a great day, and I'll plan on getting you another report next month.